welcome to another 121 mining investment content session. Today we're going to be hearing all about the cobalt market. I'm pleased to be hosting George Heppel, who is Senior Analyst covering cobalt, lithium and battery markets at CRU. George joined CRU in 2017 and is the editor for CRU's Cobalt, Lithium and Battery Metal Market Services, primarily looking at battery metal demand and pricing. George is also responsible for CRU's long-term automotive and electric vehicle forecasts. George will be presenting an outlook on the cobalt market for us, analysing the material upside and downside risks, and looking, of course, at how COVID-19 has impacted the supply chain and demand disruption for the global economic issues associated with it. So I'd like to hand over to George, and thanks for your time today.
Thank you for that kind of introduction, Adam. As Adam said, my name is George Heppel, and I'm the editor for CRU's battery metals research with a particular focus on cobalt and lithium. Today's presentation, I want to run through how we see COVID-19 impacting the cobalt market in 2020. And I want to put a particular emphasis on the metal market in particular, because I think this is one aspect of the cobalt market which we have not heard much discussions about. Obviously, discussions abound when it comes to how COVID-19 is going to impact electric vehicles and subsequently impact cobalt demand there. I will be touching on that in a little bit of detail, but I think the key thing I want to share with you is CRU's current thoughts in terms of how COVID-19 impacts aerospace and subsequently impacts cobalt metal demand. So a quick overview of the agenda. I want to answer two questions today. Firstly, why has cobalt not suffered in the pandemic yet? And secondly, what can we expect from cobalt supply and demand in 2020? So let's firstly take a look at how the base metals market in general has fared over the last few months. On the left-hand side, I've got our CRU's multi-commodity tracker, which is something that we update on a weekly basis for our clients. And it shows how the various base metals have fared over the last few months. As you can see, they've been on a downward trend really since the beginning of the year, and they've had a significant drop since the beginning of March. You can see that nickel, zinc and aluminium and copper and lead have all suffered relatively badly. But cobalt seems to have bucked the trend. You know, we have seen some decreases in cobalt prices since the beginning of the year, but only by around 8%, which isn't really that much in the grand scheme of things. And certainly nothing compared to the massive 16% drop that we've seen in copper. And in fact, we actually saw a significant bump in cobalt prices throughout much of the first half of February. And this is also shown on the right-hand side there. What I've done is I've charted our cobalt prices for China and Europe. And you can see that, you know, European metal prices for cobalt have remained relatively range-bound since really since sort of August of last year. That bump in the metal price we saw in August of last year, that was when Glencore announced that they were going to be shutting the Matanda mine. And ever since that news has come through, metal prices have remained relatively range-bound in Europe between $16 and $18. Looking to China, we've seen a bit more variation in China. We've actually seen quite a significant drop-off in the metal price in China since the beginning of March. And I will be discussing the difference between those two. But the key thing here to point out is cobalt's really left relatively unscathed from COVID-19 so far. So in order to understand why, first we need to understand how the market has been disrupted for cobalt over the last couple of months. What I've done here is I've tried to isolate all of the cases I can find of cobalt's supply being disrupted by COVID-19. We've had a bit of disruption in Canada with the Raglan and the Voisey's Bay projects being put under care and maintenance for a few weeks each. Morocco, we saw CTT suspend production for a couple of weeks as well. Moving to Africa, obviously we saw the Madagascar project and Batavi go into care and maintenance in late March. But really, when you look at sort of the DRC and Zambia, which are the key cobalt producing countries, we haven't really seen much disruption, really. There was a fleeting lockdown in the Katanga province in the DRC a few weeks ago, but it didn't really have much of a lasting impact on cobalt supply. We have seen the Usoki refinery closed, which is the refinery operated by Shemaf and which feeds mostly from artisanal units. And we've also seen construction at the Matoshi project suspended, but neither of these things are really impacting cobalt supply massively. The big cobalt producers in the region, like Glencore, China Moly, ERG, they remain relatively unchanged. South Africa, we see a bit of disruption due to freights, really. There isn't really much of a difference that we've seen there over the last couple of months. The Philippines is worth mentioning. We've seen a lot of disruption to the nickel sector there. But relatively small impacts to the cobalt producing mines there, Taganito and Coral Bay, which are two projects which supply material into the Japanese Sumitomo metal mining refineries. And China, we've seen a bit of a disruption to cobalt sulfate production, but in terms of actual sort of, mining and mine supply, fundamental supply, limited impacts there. So on the whole, you might think by the tone of my voice that the impact on the cobalt market has been relatively small. Well, yes, it has been small, but it's been concentrated fundamentally on the metal market. And before I go on, I'm just going to give a quick sort of refresher for anyone who's less familiar with cobalt on how the cobalt market is divided. Broadly speaking, we can divide the cobalt market into two separate products. On the one hand, you have the cobalt chemical market, and this is around, I would say, around 90,000 to 100,000 tons a year is the chemical market, and that's fundamentally that's electric vehicles. I mean, when we're talking about cobalt chemicals, we're really talking about electric vehicles and battery demand. Cobalt chemicals are also used in the tire industry. They're also used for pigments, catalysts, polyester, animal feeds. The list goes on. And on the other hand, you have cobalt used in the metal industry, and this is the sort of fundamental cobalt metal applications like prosthetics, like aerospace, superalloys, rare earth magnets, high-speed steels, tool steels, that kind of thing. And the metal market's a smaller market. The metal market is probably around 30,000 tons a year, somewhere around there. So it's much smaller than the chemical market. However, what we've seen is that actually when we come back to our slide showing the disruptions to cobalt supply, a lot of this disruption to this supply has been hitting the metal market, because a lot of the key projects which I've described have been metal producing projects, or they have been mines which supply material to metal refineries. And here what I've done is I've just done my best to try to estimate how much disruption to supply we have had as a result of these closures and these care and maintenances. We won't know the definite figures until we begin to see Q1 and Q2 results from a lot of these mining companies. These are just my estimates based on speaking to people in the market and based on my own opinion. But I think that we've lost around 200 tons from Canada, around 75 tons from the CTT projects. Probably the biggest impact is in Madagascar. I think we've probably lost around 300 tons of briquettes over the last month from Madagascar. And the Philippines as well, I think maybe we've lost about 175 tons of cobalt from the Filipino projects. That might be a slight overestimate. There's one, so in general, I think we've lost around, what does that come to? That comes to about 750 tons, something like that, through metal, that's 750 tons of metal supply. There's one additional thing which we need to also take into account when we're thinking about cobalt metal in 2020, and that is the shutdown of the Chambishi refinery in Zambia. So this is ERG's Chambishi refinery, which was placed under care and maintenance in January 2020 because they were unable to source enough feedstock from the DRC. Realistically, I think it's probably pretty unlikely that that mine is, that refinery is going to reopen, certainly not this year. So that's an additional 375 tons that we've probably lost over sort of Q2, maybe a late Q1. And the result is that I think we've lost around 1,125 tons of metal, around 375 tons of like aerospace, like premium quality material, probably around 450 tons of broken cathode, and probably about 300 tons of briquette. But fundamentally, we've lost around 1,125 tons of metal in a relatively short amount of time. And this is one of the key reasons why the price has remained high. So if we go back to our price view. This is really why cobalt prices have remained relatively steady, as we saw a bit of a, speaking to traders and speaking to people active in the industry, it sounds like we had a pretty big bump in activity, purchasing activity around sort of February, March time. As people tried to stockpile metal in anticipation of shortages in Q2. And that's really what's allowed the price to remain relatively high. And on the right-hand side, you can see the impact on quarterly metal supply as a result of these shutdowns. We're going from 9,500 tons of cobalt metal supply in Q4 2019, which I believe is probably the highest amount we have on record, going down to less than 8,000 tons per quarter in Q2, which I think is probably the lowest level of metal production we've seen on a quarterly basis since 2013, which is a pretty big jump, to be honest. I mean, we're talking about small volumes, but when you were talking in the context of the metal market for cobalt, which is only 30,000 tons, these small volumes do add up and make a very big difference. So that's really what's had the biggest impact on the supply side. And that's also why we've seen this arbitrage growing between the Chinese and the European market. The reason for that, on the left-hand side, you can see circled in yellow as I've shown the arbitrage there. The reason is because the European cobalt metal price is generally the price that we see for high-grade material which is produced in the countries which I've listed, whereas the Chinese price is a little bit more separated from Europe. China is a net exporter of cobalt metal. Generally, the grades are lower quality because they're used in the steel industry and the chemical industry, as opposed to being used in the aerospace sector, as we see in Europe. So, metal supply. We think we've lost about 1,000 tons, probably a little bit more. But fundamentally, the question is, what's happened to metal demand? Well, I'm not going to go into too much detail on metal demand from tool steels, high-speed steels, prosthetics, and that kind of thing. I want to focus on the market which I think is going to have the biggest impact on metal demand in 2020, and that is the aerospace market. Aerospace demand is quite a sizable chunk of global cobalt metal demand. And when we're looking at the aerospace market on face value, generally it looks like the market is in turmoil. We've seen from Airbus and Boeing, you'd be forgiven for thinking that Airbus and Boeing are facing tremendous difficulties. They've had to cut jet production by a significant amount. They're specifically cutting wide-body jet production because wide-body jets are used for those long-haul intercontinental flights, which probably we're not going to see much of that over the next 6 months, or maybe the next 6 to 12 months. And they're adjusting their production plans as necessary. So, intuitively, I'm telling you, cobalt is used in aerospace, it's used to make jet engines, and I'm also telling you, Airbus and Boeing are struggling. Therefore, you can infer from that cobalt demand is going to struggle from aerospace. Well, yes and no. I think the situation is a little bit more complex than that. Firstly, even if we do see order cancellations from Boeing and Airbus, it doesn't really make much difference to their activity rates because they have such a huge outstanding order book. They've got such a massive backlog of orders. I've just shown in green here 9 years of outstanding orders for Airbus and 7 years of outstanding orders for Boeing, that even if they have a few cancellations due to airlines going bust or people trying to airlines being concerned about their balance sheets, they still have plenty of orders to be getting on with, and their activity rates should remain relatively constant as a result. We're already seeing for Boeing, for example, we've seen production restarting in their Seattle and their South Carolina operations. And I would expect that Airbus will probably see some semblance, I expect to see Airbus trying to return to some semblance of normality over the next few weeks. So it's a complicated situation. On the one hand, cobalt's used in jet engines, and jet engines are facing issues because Boeing and Airbus have had to cut production. But on the other hand, they're bouncing back to some extent. They're trying to return to normality. What is going to be the impact on metal demand? It's very, very clear that you can't just look at bad news for Boeing and Airbus and translate that into cobalt metal demand. Well, before I explain the link between cobalt metal demand and aerospace, Firstly, let's just take a look at what the average activity of the airline market looks like at the moment. As you can see, we've seen a huge drop off in commercial flight frequency from normal levels over the last couple of months. Right now, what we're seeing is that global commercial flight frequency is at around a quarter of normal levels. Generally we see around 120,000, 110,000 flights a day worldwide, and right now we're only seeing about sort of 30,000, which is quite a significant decrease on what we would normally expect. Now, this is the important thing to understand when you're thinking about cobalt demand in aerospace. This is an extremely important metric to take a look at. And fundamentally, the reason why this is important is because of the engine overhaul industry. Now, this is probably, of all my presentation, this is probably the most important slide to sort of pay attention to. So if you're bouncing a child on your knee or feeding the cat while you're watching this, then make sure you pay attention to this as well. And when you buy an engine, when you buy an aircraft, it's not just like a done deal. Engines need regular maintenance in the form of overhauls. And when you buy an engine, when you buy an aircraft which comes with jet engines attached, it's almost like a sort of subscription service. Like Rolls-Royce and GE, they actually make a loss on their jet engines. They actually make a loss on selling their jet engines. Where they make the money is on the regular maintenance, because jet engines need regular maintenance. The pressure and the temperature at which these engines run is so gargantuanly high. So it's such a corrosive atmosphere within the engine that every 1,000 to 1,500 cycles, the turbine blades need checking and replacing inside the engine. And a cycle is whenever a plane takes off and lands, basically. That's a cycle. So this comes out to, for wide body aircraft, the sort of thing which are flying from London to Singapore and that kind of thing. That means that they have to have an overhaul every 2.5 years on average, this suggests. Narrow bodies are the kind of thing, like sort of cheap sort of continental flights between London and Amsterdam and Paris and that kind of thing. The frequency at which those planes take off and land is such that they actually need replacing every single, they actually need overhauls every single year. And this is important because, as we've seen on the previous slides, flights frequency is declining massively, and as a result, the overhaul sector is really starting to dry up in terms of activity. Airlines are not submitting their planes for overhauls at the moment, and I don't, who can blame them? Firstly, because their planes are not racking up as many cycles, so they don't need to have overhauls, but secondly, because engine overhauls are incredibly expensive. So if you can defer your engine overhaul for as long as possible, especially at a time when balance sheet is suffering due to inactivity, you can save money by doing that. Bottom right is that's a picture of Bournemouth airports, where British Airways is keeping a lot of their planes at the moment. I didn't even know Bournemouth had an airport, but obviously it's come in handy in this particular case. And that's just to give you just to give a snapshot of the extent to which global fleets are grounded at the moment. This is important because this is the fundamental driver of cobalt demand in aerospace, is this overhaul market. And we're not yet seeing an impact on cobalt demand now. Due to the length of the supply chain, I would probably expect cobalt's demands to begin to suffer as a result of this drying up of the overhaul sector in around Q3, Q4 time. Really, it depends on how long the lockdown continues for. Really, it depends on how the airline industry recovers from this, and what happens to that chart that I showed over the page of airline frequency. But the point is that we're going to see a decrease in cobalt demand this year from aerospace, but it's not coming from Airbus and Boeing making less planes. It's coming from this. It's coming from lower activity and lower flight activity within the industry. So the next question obviously is to what extent does this impact cobalt demand? Well, my calculations suggest that it probably removes about 1,000 tons of cobalt demand for high-grade superalloy. When we look at the cobalt metal market in general, including the decrease from other Other sectors like prosthetics and tool steels and high-speed steels and power generation alloys, I think will probably lose around 1,750 tons of cobalt demand in 2020. But 1,000 tons of high-grade superalloy grade cobalt is a huge amount of high-grade cobalt demands to lose. And you can see on the left-hand side, I do think we can expect a bounce back in 2021 and onwards, because at some point these aircraft will need to be overhauled, and at some point we will see an uptick in the frequency. But for now, I think that in 2020, aerospace cobalt demand could drop to its lowest level in 10 years. So the point I'm making really is that we've seen cobalt prices supported in Europe as a result of the disruptions in supply from various key metal producing mines. But I do think that the demand decrease will balance out, will more than balance out the supply decrease that we've seen from COVID-19. And I think, realistically, I think high grades cobalt is not going to have a great year as a result. So a quick overview of the question: why has cobalt been immune from the drops in base metal prices? Well, the answer is we had disruptions to supply from key producing mines. This effect is likely to be relatively short-lived, and in the long term, probably in the second half of this year, we're going to see a decrease in demand from aerospace, which is going to drag down cobalt prices, especially for premium grades, which are used in aerospace. But what about the chemical market? So we discussed the difference between the metal market and the chemical market. What about the chemical market and about electric vehicles? Well, the story here is a little bit more clear, I would say. I'd say there's a bit more sort of consensus on this. Again, there are concerns about supply, because fundamentally, pretty much all of the cobalt which is used in chemicals comes from the DRC. So there have been concerns around how Africa is going to suffer, Central Africa is going to suffer as a result of the pandemic. But the data that we're seeing coming from the World Health Organization and other organizations suggests that the COVID-19 spread in Africa has been pretty tiny, to be honest. There hasn't really been much of an issue at all with COVID-19 in Africa. No one quite knows why yet. I've put a few suggestions which I've read. I'm not suggesting that any of these are correct or wrong. All I've done here is I've collected things which people are saying as to why COVID-19 might not be taking a hold in Africa as much as it is in other regions. Warmer weather, higher higher incidence of UV radiation. There have been suggestions that people have existing immunity from BCG vaccinations, which are used for tuberculosis. There are less dense populations to an extent. I'd say there's also less sort of travel between regions as well, compared to like Europe, where there's a lot of travel between countries. Africa is generally a little bit less mobile. And I've also seen it suggested that there's a more outdoors lifestyle, but I'm not quite sure how that impacts COVID-19. But I thought I'd add it in. Answers on a postcard as to how that impacts COVID-19. But anyway, so the impact of the actual spread of COVID-19 in Africa, it looks like it's probably going to be limited. So I don't think we can expect too much in the way of supply disruptions from the DRC for cobalt. There have been suggestions that we will see logistics disruptions because South Africa in particular has put its populace into a very, very heavy lockdown, and that has resulted in a significant amount of disruption to freight and the movement of metals and minerals through South Africa. But what I've shown on the left-hand side is just a chart of the potential ways that materials can get into and out of the DRC. Generally there are a lot of options available to a metal mining company in the Congo, and any freight forwarder worth their salts could probably transfer materials out a different way, especially through Dar es Salaam. That's a key way that material is removed from Africa, as well as through Durban. So the point I'm making is, supply disruptions not as important as metal disruptions, I would say, for the chemical market. I don't think we can anticipate any major impact on sort of cobalt hydroxide availability, and that's really reflected in the payables. We haven't seen much in the way of sort of payable disruption over the last few weeks. What about demand? Well, demand's looking pretty good for electric vehicles, despite the fall. I mean, the automotive sector in general is going to suffer really heavily this year. CRU expects automotive sales worldwide to decline somewhere between 15 and 20%, depending on the region. But we still expect electric vehicle sales to grow. I've got a couple of charts here. Firstly, I've got Chinese electric vehicle sales on this particular slide. And as you can see, on the left-hand side there, what we're really expecting is that, firstly, if you look at the chart on the left-hand side, look at the March yellow line. Those are actuals numbers, and you can see that despite COVID-19, obviously February was a pretty bad month for electric vehicle sales. Generally, it always is because of Chinese New Year anyway. But the March, despite COVID-19, March electric vehicle sales were actually pretty strong at around 50,000 units in China. What I've done is I've just kind of put a chart of maybe what we could expect in terms of trends for electric vehicle sales in China. April, I think we could expect a bump in sales due to pent-up demand from people not being able to get to dealerships and that kind of thing. In June, we would probably normally see our regular peak in sales before the subsidy policy changes in July. The Chinese government has announced that subsidies are going to decrease by 10% for electric vehicles in 2020, and that will come into force from July onwards. So we will see that peak in sales in June as people rush to get electric vehicles before the peak. July will see a normal sales trough due to the subsidy change, and then from Q4 onwards, we will see an increase in electric vehicle sales as new models become more available. I'm specifically talking about the Tesla factory here. Tesla Gigafactory Shanghai, I believe they're aiming for 5,000 units a week towards the end of this year, assuming they can scale up to that level. I think there will definitely be consumers for that. I think they'll probably be sold out, and that's going to have a big bump on electric vehicle sales. So what that means is that last year we had 1.2 million electric vehicle sales in China. This year we expect 1.35, which is just over 10% year-on-year growth in 2020. There's a lot of reasons to be positive about electric vehicles in China. Subsidies are going to remain this year, albeit at a lower level. We're still going to see the purchase tax exemption for electric vehicles. We'll probably see a lot of pent-up demand being released. And we're also seeing new electric vehicle models coming out as well. But there's a little bit of a caution to this, because I don't think that this will automatically all translate into high cobalt demand. I think we will see cobalt demand growth in the Chinese electric vehicle sector. But there have been a few changes to the market which do work against cobalt demand in China. Firstly, the new subsidy scheme which is coming into place is limited to only vehicles under 300,000 yuan. So it's around $42,000. Immediately, that means that if you're looking to buy, a nice sort of Western import electric vehicle, like a BMW or a Land Rover, like a Jaguar Land Rover vehicle or something like that, you're not going to get any subsidies for it, unfortunately. So that's going to have a big impact on Western, like European electric vehicle exports into China. We're also continuing to see the shift to LFP. We're seeing a resurgence in LFP in the Chinese market, especially driven by new technology changes, especially at BYD, but also Tesla with their Model 3, which was announced a few months ago that's going to have an LFP option for the Chinese domestic market. And also we might see consumers moving towards cheaper vehicles due to lower expendable income as a result of a recession, which could also impact cobalt as well. So the story is good for electric vehicles in China, but that won't necessarily all translate into cobalt demand. We'll still see an increase in cobalt demand in China, but not sort of as much as we've seen in prior years. But what about Europe? What about the USA? Well, I mean, we have heard a lot of people saying that electric vehicles is going to suffer in 2020 as a result of the impending recession, as a result of COVID-19 and that kind of thing. But the interesting thing actually is, there isn't much data yet for Q1 in terms of electric vehicle sales in North America and Europe. But the data that we do have suggests that Q1 was a record year for electric vehicle sales in Europe. It suggests we saw about 126,000 electric vehicles, pure electric vehicles sold in Europe in Q1 2020, which is a huge growth on the previous largest, which was Q4 2019. Despite a lot of the economies being shut down in March, we still saw a huge amount of sales and deliveries. And for this reason, we do still expect electric vehicle sales to grow in Europe. nowhere near the rates that we've seen in previous years. On the right hand side, what I've just done here is I've charted year-on-year sales growth for different regions, and as you can see, for all the regions that we have included within this graph, you can see a big gully of lower growth in 2020 and to a lesser extent 2021 as well, but we're still expecting growth. You know, even though we expect the automotive sector to decline by 20% year on year this year, we're still expecting electric vehicle sales to grow because there's a lot of pent up demand. There's a lot of new capacity coming online, and they also make a lot of tax sense as well in some jurisdictions. So in conclusion, consumer stockpiling and supply concerns have kept cobalt pretty high in the last few months. You know, we've seen cobalt metal prices running very high in Europe, despite bucking the trend of base metals in general. But this is going to be balanced out by a decline in aerospace demand. I think the industry has to think very carefully about how much demand is likely to be impacted by aerospace over the next year, and that's probably going to have an impact on metal prices at some point. Looking to the chemical market, it's not all bad news. Electric vehicles we're still expecting to grow in 2020 at a lower rate than expected. But because China is sort of shifting more towards LFP, Europe and North America seem to be the key drivers of electric vehicle cobalt demands going forward. And just to finish off, I've talked a bit about sort of how the cobalt price is probably going to fall towards the end of this year as a result of lower demand from aerospace. Key question there is how low can it go? Just to give you an example, what I've done is I've included a chart of 100 years of cobalt prices on the right hand side, and generally we see a historically broad support level of between $10 and $15 per pound. Generally 12 to 13 seems to be the bottom. So I think we could expect cobalt metal prices to fall back down to the sort of levels that we were seeing in the second quarter of last year, namely around sort of $12 to $14 per pound. But that's probably going to be somewhere near the bottom of where they're likely to go. So thank you very much for listening. I've been George Heppel. I'm the editor for CRU's Battery Metals publications. I've included my contact details there. If you have any questions about this presentation, please don't hesitate to get in touch.